Welcome to the Taxing Subjects Podcast. I'm Ryan Norton, and today I'm joined by two EAs. In the studio, we have Jim Lowe, the owner of AVL Tax Professionals in Asheville, North Carolina. And on the phone, we have Jerry Gaddis, the owner of Tropical Tax Solutions in the Florida Keys. Welcome to the show, you two.
Thanks. Glad to be here.
Thanks, Ryan.
Now, we're just a few weeks removed from the end of tax season. There were a few hiccups that went down this year, but I mean that's not terribly different from most years. Usually we have something happen, but just as a quick recap, we had some natural disasters. We had some really nasty hurricanes and nor'easters. There was the threat of a government shutdown. There was a government shutdown. Not sure how much those actually affected tax season, but we can maybe talk about that. We had the early February extenders legislation. We had the Tax Cuts and Jobs Act. Now, most of that stuff will take effect for this tax year, not for last tax year. But I know that it's very likely you both had people asking questions about that. And then, of course, there was the 11th hour IRS outage on tax day. But which of those various challenges affected you guys the most, and how did you deal with those? We'll start with you, Jim.
I think for us the biggest one was the tax bill passing so late in the year. Trying to scramble to understand it because we knew that clients were going to want to know what the effect would be for them. So and ultimately it ended up taking more time with the client. We tried to tax plan with every client. Fortunately, Drake came out with their forecast little sheet to kind of give us an idea of what the implications would be, and then updated the tax planner as time went on. But still, the bill is, we're all just going to take the rest of the year and figure out what it means. So trying to, first of all, explain to a client what their 2017 tax return implications were, and they're asking tons of questions like, why do I owe? What's different than 2016? And then trying to transition and explain to them what 2018 is going to look like was a little mind-blowing.
Sure. And what about you, Jerry? Did you have a lot of issues with the getting around the tax bill with your clients, or did you have other issues? What did your season look like?
I think our season was probably pretty similar to Jim's in that people had a lot of questions about the Tax Cuts and Jobs Act. They wanted to know, what was changing and when it was effective, because people heard that the tax law had changed, but they didn't realize that it wasn't for the return they were filing now. It was for the return they'll be filing a year from now. So we had a lot of conversation about that. We tried to people understand the impact of that and strategies for taking advantage of some of the itemized deductions that they might not be able to take advantage now. One of my favorites is the RMD to charity rollover from an IRA distribution. So talk to people that maybe wouldn't get the itemized deduction for their charitable contribution, but would be able to use the RMD charity rollover to reduce their taxable income anyway. So that's always a fun conversation to have. Of course, here in Florida, every conversation was about your hurricane experience. In addition to the normal changes to the tax law, there were a variety of tax laws passed for people presidentially declared disaster areas. So the challenge was helping people understand what those were, what the substantiation was required, and just make it more fun. The law allowed you to take those benefits in 17 or in 16, depending where the biggest benefit was. So we did a lot of trying to figure out what the loss was and then figure out which year to put in to maximize their tax savings.
About the Tax Cuts and Jobs Act, what percentage do you two think of your clients would have had questions about that this year? Would it have been just the vast majority? Would it have been just a handful of people? And what do you guys think those numbers represented for you each?
I'm not sure how many people asked about the Tax Cuts and Jobs Act, but we talked about the Tax Cuts and Jobs Act with everyone. With the standard deduction going up and the personal exemptions going away, it does affect people's ability to itemize. Of course, some of those itemized deductions people have control over in terms of timing. So we tried to discuss, does it look like you would itemize in the future? Does it not how can you take advantage of timing differences to perhaps itemize some years and not others. So we try to go through that with everyone. And as Jim said earlier, that worksheet that Drake provided showing people what the change would be had the 2018 laws been applied to their 2017 return was a great place to start the conversation. It was a great tool. I was thankful that Drake provided it.
Yeah. I would just add to that, same with us, Jerry. If they didn't ask, we try to give them some implication. But when I guess it was the 1st of February, the IRS updated the withholding charts. So in addition to trying to show them the tax savings, a good number of clients, the adjustment was too much. So we were trying to get them to bring in their last pay stub, in April or whenever we met with them, February, March, or April, to kind of spot check that, because it appeared that some people, when those charts changed, their withholding was adequate for 2017, but moving into 2018, the withholding adjustment was just too much. So, potentially we could see in 2018 people having a bigger tax savings, but not have enough withholding and maybe owe tax is kind of one of our fears.
How did the late passage of extenders, usually that's like an end of December thing, most years. How did I guess actually it wasn't late February, it would have been early to mid February. I think it was February 8th. But how did that affect you guys?
Not greatly. The big one for us was the mortgage insurance premiums. But a good number of our clients phased out of that due to income anyway, so it wasn't a huge deal. I think the energy credit, it wasn't. Fortunately for us, most of our business is after the 15th of February. We don't do a lot of early business, so that was already in the software by the time the majority of our clients came through, so it wasn't a biggie for us.
Yeah, I think we had the similar circumstance. We don't generally do a lot of early season returns, and because so many of our people were waiting on hurricane-related forms come out, even the ones who did normally file early were sort of sitting there on hold waiting for some of the other forms to be available. So it didn't affect us too much. I would hate to see that be a precedent that Congress is going to do it every year, because obviously as an enrolled agents, part of what we do is tax advice and help our people plan. And it's really hard to plan when you don't know what the rules are.
Switching gears just a little bit, this year, probably since 2015, since the Security Summit was formed, data security has been a very hot button issue, not just in the broader population, but especially for the tax industry, because of identity theft also affecting tax returns and people trying to get their hands on refund money. And this last year, we saw another evolution of phishing scams. This time we had the thing where cyber criminals would file the return for the taxpayer, often using a tax professional's software if they'd hacked their way in with an account takeover. Then they would deposit it in the taxpayer's account rather than pocketing it, and then they would call the taxpayer or email them and essentially try to trick them into depositing that money in the cyber criminal's account. What types of data security issues have you two faced, and what do you do to protect against cyber threats more broadly? And Jerry, I'll start with you.
Thanks, Ryan. I think everyone in the industry is wise to focus on data security. The IRS seems to have figured out it's a problem, and they're trying to do information to inform the tax preparer community, which I think is great. We, of course, anytime there's a scam, it seems to be centered in Miami, Florida. So we have a huge ID theft problem here in Florida. As a result of that, we do have the ability to get identity protection pins for clients. So we've recommended that to a number of people who felt that they may have been compromised. My understanding is those are not available in all 50 states, but they are available here in Florida. It's a special pin you put an additional pin you put on your tax return or any tax correspondence so that the IRS knows it's really you and not someone impersonating you. The challenge, of course, is when someone loses their identity protection pin, get a copy of them, because they lose them and it made it really hard to communicate with the IRS. The IRS has convinced me, as has NAEA and many other trade associations, that the bad guys are after the information that we have, and we need to do our best to secure it. So we tried to convince our clients this year that that's important. We encourage them not to email us personally identifiable information. Got them all used to working with the portal, and it went better than we expected. I feel like we took steps in protecting our taxpayers' information by using that tool for great.
Jim, what do you have to say about data security?
I'd agree with Jerry. We've been using Secure File Pro for about 3 years, but really have tried to push our clients more towards it every year. Even so, you still get, the data in your email, no matter how much you try to tell them. And, part of the problem is a lot of clients just don't seem to care. So there's only so much you can do with them, but other than just refuse an email. So we've taken that step. This year we updated our server in SonicWall just to keep the equipment current. We have, the last couple years, attempted to keep all of our internet work off our internal network and put it on the guest Wi-Fi side. So, my daughter works with us. She doesn't mind using a tablet. My wife and I are old school, so we have to have a PC, but we have it, on the wireless guest side. So. Just trying to keep the whole internet off of our network except for, Drake updates and e-filing and that kind of thing. So those are some things that we've done, but, it's out there, and we're just, I can't remember how many phishing emails as a tax professional I got this year. I'd like to send you my data. Would that be okay to, And, people are contacting you through your website, so you're trying to be conscious of, you don't want to offend anybody. So our policy basically was, we're not communicating with somebody we don't know via email. Phone call first, and then go through some steps to verify who they are. Because it's a digital world, and, especially millennials, that's how they communicate. They probably never prefer to even come into your office. So. It's just always a challenge.
How has increased security affected your clients? I know you talked a little bit about how, a lot of the millennials, the younger generation, do not really want to even come into the office. But specifically for like EITC and ACTC federal return delays because of the PATH Act, I think, and maybe I'm misspeaking, but I would think that after, I guess this is the second year that they've had that delay, I would think that some people are getting used to, if they're taking those benefits, that they're used to having their return come in mid-February to late February, early March. But this year especially, we saw a lot of state departments of revenue have delays as well because of trying to verify people's information, verify that's the taxpayer that is actually going to receive the refund. So have you had any issues with people being frustrated with or not understanding why their state return now is taking longer? And I guess the second part of that would be, do you think that refunds will continue to be pushed back further and further into the year, in the years to come?
Well, I agree with you, Ryan. Early filers have gotten used to the fact that they're just not going to get their refund till mid or end of February now, pretty much is the case. So we had very few people question that because we told them, this is the way it is now. But you're right, many calls about North Carolina. Why is it being so delayed? And there's just no answer to it other than they're just slow. It's security. But we did get numerous calls about North Carolina. Probably none for federal, but North Carolina was an issue.
Do you think that they're going to start pushing back further on the day that they actually get refunds as they continue to try to increase security?
Well, I think there's the potential because ultimately they'd like it to be real time so that they can verify, W-2 data and all that before they process the return. But, and I think we'll talk about this later, the new tax bill that came out to rejuvenate the Internal Revenue Service.
Yeah.
There was discussion about technology there, but, who knows?
Yeah.
Who knows?
It can be difficult to prognosticate that kind of thing. How did it affect your practice, Jerry?
Well, I'm in Florida where we don't have state tax returns, which is a beautiful thing. One of the weird things I've seen is that the state of Florida is, when they do get someone's refund has been garnished for, say, child support or something like that, the state of Florida is holding those garnishments longer because not sure if it's a real return or a fake return. And they've had instances where they've taken the money that was garnished and given it to the injured party, only to find out that wasn't really their refund, and they try to get it back from the injured party. So that's been kind of an interesting thing in the state of Florida. But I think the Congress has to figure out what they want to. They seem to hate refund anticipation loans. And then every time they delay the timing of a refund, they increase the demand for refund anticipation loans. So they seem to, not like the refund anticipation loans and not like the fast refunds. And the market, of course, wants one of those things happen. So I think it's a question that, the policymakers have to figure out how do they want to make this work and which direction they're going. I think the preparer community would get behind either plan, but it just seems like they can't be against both things at the same time and satisfy the taxpayers at the same time. So it'll be interesting to see, what the policy wonks have to say about that.
Jim, you just kind of mentioned the Taxpayer First Act that I think we got in late March, a press release by the House Ways and Means Committee. I think it was a subcommittee of the House Ways and Means. But in the document, they talked about wanting to codify the Independent Office of Appeals. They talked about making the volunteer income tax assistance program permanent, VITA. They also mentioned something like they wanted to prevent taxpayers who are 250% below federal poverty levels from being referred to private collection agencies. And also they talked about just data security as well. So we can talk about that, or if you just want to, we can talk about just broadly changes that you think should be made to either the IRS or the tax industry that could either help your industry, help taxpayers specifically, because they were also talking about, I think there was a bit about licensure in this bill as well for tax professionals, but I'll just kick it back to you two. And what do you think about either the Taxpayer First Act or just broadly the types of reforms that you think should be brought to the fore for the industry?
Thanks, Ryan. I think that's a really good question and a really broad question. Again, the IRS has got to have a plan long term they're trying to do. It's interesting to me that the volunteers that they want to codify and make permanent have to pass a competency test every year to volunteer, but paid preparers don't have to pass a competency test every year to volunteer. So it's really seems odd to me that the volunteers in many cases are better trained than the paid professionals. Obviously, that's not every case. There are exceptions to that, but I think it shows that the IRS is in favor of minimum standards for preparers because they won't let you volunteer at their site, and Congress seems to be opposed to minimum standards for preparers. So that's one of those things that they have to figure out. And I think they have to look big picture as well. If preparers aren't going to be regulated and the IRS isn't going to be funded, audit rates are going to be really low, there's going to be tax fraud, which is going to obviously cost the government revenue. So they have to figure out at some point if they're trying to increase revenue or make sure to close the tax gap by collecting all the revenue that they expect, they've got to do something. They've got to do one of those things or a number of those things together. And right now it seems like there is no consensus as to what to do. Meanwhile, it seems like every year the IRS budget gets cut and they get asked to do more. I mean, just to implement something like the Affordable Care Act or the Tax Cuts and Jobs Act, where every form changes, all the instructions change, all the programming has to change, and they're expected to do it with less money and fewer resources. it just seems to decrease the chances that they can do that successfully. And it often ends up impacting taxpayers and the level of service they provide to the general public. So I think there's some interesting debates going on in Washington that have to be resolved before people in the old agents like me and Jim can really tell our clients what's going on and help them navigate their way through the tax system.
And you brought up a really interesting point about budget, and then this particular draft legislation talks a lot about returning back to being a customer service oriented agency for the IRS, which reminds me of the 98 reforms that occurred as well, because that was
Kindler, gentler.
right. And so I think it is a great point about, well, if they're going to be a service agency, they're probably going to need funding to do that and perform enforcement as well. But Jim, what do you have to say about the topic?
Well, and I haven't really. I actually just read an article from accounting today, and that was pretty much it because I haven't had a chance. But the name of the bill, Taxpayers First Act, I like that.
Right.
I don't know if that's really true or not, but it's a nice name, and if that's really what it means, that would be great, because all of us know customer service. From my experience, most taxpayers want to be compliant. They have messed up lives at times. They fall behind. Things happen, but they want to get caught up. And when we help a client get caught up, it takes such a weight off their shoulders, even if they have to go on a payment plan or whatever. But the problem is, if there needs to be communication with the Internal Revenue Service, either with Jerry and I as EAs contacting them or the taxpayer themselves, we all know that you just have to wait. And then, oh, it was the wrong department, I'm going to transfer you. And, it just goes on and on and on. So if that part can be fixed, I think that's a step in the right direction. All the rest of it, I haven't had a chance. But I did, I'm going to just read the end of this article because this is something Jerry just touched on. They talk about all the things that they want to do, the technology, the customer service, all of that. But at the same time, they haven't appropriated any funds to do any of this. And like Jerry said, they keep cutting their budget. And I've always questioned the arm of the government that collects the money to fund the government. Why would you ever cut their budget? And I know that they think that they're misappropriating funds, and maybe that's what this bill is all about, to try to get them straightened up so they spend their money correctly. But just in the technology realm alone, not to fund that portion of it, to me, is crazy. But we'll see.
Yeah, I think that there is a question mark kind of hanging over this right now, and also since it's draft legislation, what form it takes if there is a final product to arise from it. I know that there had been some bipartisan support for this particular draft legislation, so I'll be curious to see and watch how that takes shape in the next few months or years. Before we go, I just want to kick back to you two again and say, are there any specific things outside of what we talked about already that stick out in your minds regarding this tax season, and maybe how you're going to forecast for next year? I think we'll start with Jerry on this one and then close out with Jim.
Yeah, so that's a really good question. I think one of the things that everyone in the tax preparation community is thinking about is what to do with Tax Cuts and Jobs Act. If, let's just say that 50% of your clients who officially itemized won't be itemizing in the future, what does that do to your revenue stream? Do we want the same number of clients at half the revenue? Do we want to send them to the volunteer clinic? I mean, I think we all have to figure out, now that we're through the season, we all have to go back and look at our Schedule A's, figure out, how many people are going to have an easy next year and perhaps not need professional help, and then what to do with those people and how to serve those taxpayers. Obviously, if they're on a simple, or if they go to a 1040 easy or a simple return, they're less likely to need our help. And if you price by the amount of work you do, the revenue is probably going to go down. So I think for me, one of the questions is, how many of those people do I have, and what do I want to do with them next year? And of course, in the back of my mind, thinking every one of those tax breaks that went away with the Tax Cuts and Job Act has a constituency. And there's probably a bill in Congress to bring every single one of those things back. So are they really going away? And will they really not need to itemize next year? Or will all the rules be different by the time we get to, November of 2018? I don't think anybody knows the answer to those questions.
Yeah, and I think it'll be curious to see, because one of the things that people were expecting, if they didn't really follow the story closely, was there was much ado about the removal of the penalty for not having insurance, kind of wrapped up in the Tax Cuts and Jobs Act. And it's not going away until 2019. And I talked to John Sapp about this on the program. I think it was our very first one. But he had pointed out, it's not that it is repealed, it's just reduced to zero. So if they decide that they need to re-implement it, I guess they can just tweak that number. But I'll be curious to see how not having that penalty goes next year with both. I mean, I know that it'll remove a specific tax implication, but they're still going to have a penalty recorded, even if it's at zero, I suppose. But Jim, what do you think about overall this tax season, maybe with respect to Tax Cuts and Jobs Act or anything else, really?
Well, I agree with Jerry. We're wondering about income stream. I don't know that we're going to. I think people are still going to come back next year because they don't know or understand or are not sure. And then what do we charge them? You walk in, you got an EZ, and last year you came in with a bunch of medical receipts, and it was more work, and so that is going to be an issue. And there was a lot of discussion about the insurance penalty. I won't have to pay it, right? And I'm sorry, yes, you will have to pay it, and that too. To kind of go a different direction, one of our biggest challenges now is client communication and securing their documents. Back in the old days, and I've been doing this since the early 90s, your taxpayer brought you all their information. We do mostly drop-off clients, and the information was there. You rarely had to call them with a question. Now the information trickles in because they're not getting all the information in the mail. They're signed up for online everything, so it's just not the same, and the information doesn't come to us seamlessly. And email is just exploded in the last couple years for us, where I probably spend 50% of my time just answering emails, trying to get information, so that's a big challenge. And Secure File Pro has helped if we can get the client to use it, and instead of emailing something to us or upload it or whatever. But there's still so many puzzle pieces to get a tax return done, and there's always one or two missing, and it just adds extra work and extra time. So trying to figure out that way forward for us is going to be one of our big challenges we're going to work on this off season.
And Jim, I don't know if you had this issue, but I had a horrible time getting 1095 forms from people this year. I mean, even Medicare, I had a chat someone printed out for Medicare, where Medicare said, we're not sending you the form that goes to the IRS and they already know. And I wanted to tell Medicare, well, I don't know, and I have to answer the question and sign the form. And I had a number of HR quote-unquote professionals giving me tax advice, lecturing me on why I shouldn't be asking their employees for these forms, because it's very clear that I don't need them because the IRS has them. And I kind of didn't appreciate getting tax advice from these HR professionals who had these forms that just refused to give them out. And it's more pressure on us, obviously, as we have our own due diligence requirements to get these forms. And another thing I ran into this year that I'm not quite sure what to do with is, instead of getting PDFs of things, I'm getting photographs of things. And it's great that you can take a picture with your phone and send me a photograph, but I can't I haven't figured out how to work with that document and to file it and merge it in with my PDF so that my files are neat. So that's one of our things for this year, to figure out to do with the barrage of pictures that are coming in, as opposed to documents, and making sure that we, protect those and can file them appropriately so we can find in the future. I don't know if you saw either of those things this year, Jim.
Yes, and I was just about to say, John Sapp's like, you shouldn't have any images in your email, because there can be, stuff embedded in images that are, yes. And I can't find a way to send back this 8879, so I'm just going to take a picture, and they do. So, yes.
Okay, I'm glad it's not just me, because I get the same thing. Like, I don't want a picture of your 8879. I don't want your 1095. I want a copy of it, because I'm a dinosaur and I want to put it in the PDF and merge it into one file and stick it in the DDM, so I have one thing to look at.
I'm totally well, we're even more a dinosaur than you, Jerry, because we scan on the back end, so we keep a photocopy of everything for 2 years. And I know that that's sinful and whatever, but I just can't do a return unless the paper's laying in.
You got to go paperless, Jim.
I know.
Come on.
We are paperless. Everything 2 years prior.
When I started my practice, I wanted to be paperless. And so I looked at technology and everything, and I liked the direct document manager and said, all right, I can scan it into the DDM, hand them their papers back, pull it up on one screen, pull up the software on the other screen, and do my thing.
And I think with the picture thing, I think what's happening is it seems like there are apps that let people take photographs of things, and it'll convert it into a similarly like a PDF. And so that may be what they think is happening here.
Well, they're taking a picture of their paycheck and it's going into their bank account. I mean,
right.
It's anyway.
Yeah, and I'm curious, how do you handle like the HR situation? Do they eventually give you the information you need to satisfy due diligence, or is this just a thing that because it has been a hurdle that can't be crossed over yet?
Well, I had one HR professional send me a link to the IRS website that says the forms do not have to be provided to the employees, and I just thanked him for his tax advice and reminded them that I also signed the form under penalty of perjury, and since he has it, if he would please forward it to his employee, it would be really helpful. But I have literally one client came in showing they were doing an online chat with Medicare, where Medicare says, we have the forms and they're going to the IRS, you don't need them. Well, if I have, a 1095 that said they had insurance for half the year, I don't know that they had it for the other half of the year, and my job is to calculate the penalty, not just assume the IRS will calculate it when they got there. So I think the advice going to the HR professionals, to Medicare, is not helpful to the tax preparer community. And again, it's probably not something the three of us can fix on this phone call, but it would be nice to see. I feel like some of those tax reform issues have been designed to cut the tax professionals out of the loop. Like, we used to be able to submit a power of attorney online, and now we can't. But the client, if they can handle their own portal and have their own phone in their name and answer the security questions and understand the process, could submit their own power of attorney. And I think it's great that the IRS is trying to work directly with taxpayers. But I think any solution to IRS reform has to include the preparer community. I mean, the IRS answers about 50% of their phone calls. And I don't know about Jim, but I answer 100% of mine. So when people come in to me as enrolled agent asking for help or representation or communication, and the IRS is trying to cut me out of the loop so I can't help them, it feels like they're cutting off their nose to spite their face. Enrolled agents are highly qualified, highly trained, professional, adhere to ethical standards. We're trying to help people deal with the IRS. And if the IRS would make it easier for us, to communicate with them as opposed to doing things through snail mail, if they would allow us to collect electronic signatures. I don't know about you, Jim, but if I get a new client who needs a power of attorney, I have to fill out the power of attorney, put it in the portal, have them print it out, have them sign it, scan it, put it back in the portal, send it back to me, so I can fax it
And
to
then
the
wait
IRS.
2 weeks.
Like, yeah, it's like, come on, guys, you know, we're in the 21st century and we're using snail mail and fax machines just to get the right to talk to you. So, you know, so now the client has waited a month. They've incurred more penalties and interest. So I strongly believe that any solution to modernizing the IRS and improving the service has to include the tax preparer community. Because we've got people out there every day who are trying to help taxpayers deal with the IRS, try to close cases, try to solve problems, try to get them on payment plans. And the IRS, it would just be helpful if they involved more stakeholders more actively, because I think a lot of people preparer community have solutions to how things could get better. And it would be great if the IRS and Congress, you know, were more open to listening to those suggestions and working with those stakeholder and other partner groups.
All right, fellas, I think we're going to leave it there. I want to thank you both again, Jim and Jerry, for joining us today. And we'll see you all next time on the Taxing Subjects Podcast.